Welcome to Chapter 10 of Performance Management, Budgeting. Budgets are one of the most important tools in management accounting. They link strategy with operations and help organizations plan, control, communicate, and evaluate performance. By the end of this lecture, you will be able to understand budgeting in the performance hierarchy, explain the main systems, identify sources of information, evaluate budget types, prepare flexed, rolling and activity-based budgets, explain beyond budgeting, discuss target difficulty, participation and controllability, describe the challenges in changing systems, show how budgets handle uncertainty, and consider ethical and sustainability issues. Budgets fit into the performance hierarchy. At the strategic level, they reflect long-term objectives. At the tactical level, they allocate resources to projects and departments. At the operational level, they guide daily action. Without budgets, the link between strategy and operations is often broken. Budgeting serves several purposes. Planning forces managers to think ahead instead of reacting. Control allows results to be compared with plans and corrective action taken. Communication ensures expectations are shared up and down the organization. Coordination aligns all departments to a common corporate goal. Evaluation allows managers to be judged fairly on revenues and costs within their control. There are many systems. Top-down is led by senior management, while bottom-up involves junior managers. Incremental uses last year's budget plus adjustments. Zero-based starts from scratch. Rolling updates the budget continuously. Activity-based uses cost drivers rather than departments. Feed-forward control anticipates problems before they occur. Selecting a system depends on factors such as the nature of the organization, its environment, the availability of data, and management culture. Incremental works well in stable organizations. Zero-based suits dynamic environments where costs need justification. Rolling budgets are effective in fast-changing conditions. Activity-based is accurate in complex service or manufacturing settings. Top-down is appropriate for strong central control, while bottom-up works in participative cultures. Feed-forward is useful when early correction is needed. Top-down budgeting ensures strategic alignment and speed, but can demotivate staff. Bottom-up provides realism and ownership, but may lead to budgetary slack and is time-consuming. In practice, a mixture is often used. Incremental budgeting is easy to prepare but can lock in inefficiency. Zero-based challenges every cost, improving efficiency but requiring effort. For example, under zero-based, a marketing manager must justify each campaign rather than simply repeating last year's spend. Rolling budgets maintain a 12-month horizon by adding new months as each ends. They keep budgets relevant but require ongoing work. Activity-based budgets allocate costs to activities such as purchase orders, giving accuracy but needing detailed information. Feed-forward control is predictive. For example, if a forecast shows demand will fall, managers can cut production in advance. This avoids waste and is a proactive form of control. Budget information comes from internal sources such as past results and departmental forecasts, and external sources such as competitors and market research. Problems include bias, inaccuracy, and outdated figures. Reliable information is essential. Budget types also vary. Fixed budgets are easy but poor for evaluation because they assume one activity level. Flexible budgets adjust to actual activity, providing fairer comparison. Master budgets consolidate all functional budgets into one. Functional budgets focus on departments. Incremental, rolling, zero-based, and activity-based systems each have their own strengths and limitations. Flexed budgets are especially important. Suppose 1,000 units were budgeted but 1,200 were produced. A flexed budget adjusts sales and variable costs to 1,200 units. This ensures that variances reflect real performance, not differences in volume. Rolling budgets extend the horizon and ensure management always looks ahead. Activity-based budgets link costs to activities such as machine setups, producing a more accurate picture of resource use. Budgets also affect behavior. They can motivate, but they can also lead to slack, manipulation, or short-termism. Hopwood identified 3 styles. The budget-constrained style emphasizes meeting short-term budgets. The profit-conscious style balances budgets with longer-term profit. The non-accounting style focuses on wider, non-financial measures. These styles highlight the behavioral dimension in budgeting. Target difficulty is also key. Easy targets encourage little effort. Challenging but achievable targets are motivating. Unrealistic targets frustrate and demotivate staff. Always consider whether the target is at the right level. Participation in budgeting gives managers ownership and improves realism. However, it is slower and can lead to slack if managers deliberately understate revenues or overstate costs. The principle of controllability means managers should only be judged on what they influence. For example, a production manager should not be assessed on sales revenue. Fairness in evaluation improves motivation. Budgets must also consider external factors. The PESTEL model highlights political, economic, social, technological, environmental, and legal influences. For example, tax changes, inflation, automation, or new environmental laws may affect budgets. Beyond budgeting is a modern model that challenges traditional systems. It is built on 6 principles: setting relative rather than fixed targets, linking rewards to performance against peers, making planning adaptive and continuous, replacing rigid controls with key performance indicators, allocating resources flexibly, and coordinating through shared values rather than fixed numbers. Benefits include flexibility and innovation, but implementation is difficult. Changing budgetary systems is challenging. Barriers include organizational culture, resistance to change, costs, and training needs. For example, moving from incremental to activity-based requires new systems and detailed data. Budgets also help in managing uncertainty. Flexible budgets adjust to actual activity. Rolling budgets keep forecasts current. Scenario planning prepares for different possible futures. Forecasting and sensitivity analysis test assumptions to show how results change with key variables. Ethical and sustainability issues are increasingly important. Ethically, budgets must be prepared honestly, without manipulation. Sustainability means including social and environmental goals such as reducing emissions or supporting communities. Many organizations now link budgets to corporate responsibility. To recap, budgets link strategy to operations through planning and control. They serve multiple purposes including planning, communication, coordination, and evaluation. Different systems suit different contexts. Flexed, rolling, and activity-based budgets improve accuracy. Behavioral and ethical aspects must always be considered. Beyond budgeting provides flexibility, but has challenges. Mastering these ideas will allow you to confidently handle budgeting questions in the performance management exam. Thank you for watching. See you in the next one.